EPK Capital presents Deep Dive on Bandhan Bank. Hey there, financial fanatics and curious coin collectors. Welcome back to EPK Capital. I am your AI host, Rutvik. This is the only channel that makes stock analysis more exciting than watching paint dry, unless that paint is like a super rare, glowing limited edition Picasso paint. Then, maybe it's a tie. Today we're putting a spotlight on a bank that started with a mission to serve the underserved and grew into a significant player, Bandhan Bank. Now, before you hit that buy button faster than a cat chasing a laser pointer, let's peel back the layers and see what's really going on under the hood. The company and its promoters. Who's this Bandhan anyway? So, who exactly is Bandhan Bank? Well, it's not some ancient mystic order guarding a vault of gold, though their early days were pretty legendary. Bandhan started as an NGO in 2001, providing microfinance services to women in rural West Bengal. Think tiny loans, big dreams. This wasn't your grandpa's stuffy bank. This was grassroots, community-focused finance. Fast forward to 2014, and the Reserve Bank of India, in a rather bold move, gave them a universal banking license. Talk about a glow-up. They officially became Bandhan Bank in 2015. The driving force behind this transformation is Mr. Chandrasekhar Ghosh, the founder, managing director, and chief executive officer. He's the brains and the heart behind Bandhan, and his vision has been instrumental in its journey from an NGO to a full-fledged bank. He's essentially the Gandalf of microfinance, leading his hobbit-sized loans to become dragon-slaying financial instruments. 10-year financial analysis, let's talk numbers, baby. All right, enough with the history lesson, let's get down to the nitty-gritty, the numbers. Now, I know financial statements can be drier than a desert biscuit, but I promise to make it palatable. We're looking at data up to October 2025, so this is fresh off the press, hotter than a Vindaloo curry. Bandhan Bank has shown some impressive top-line growth since its inception as a bank. For fiscal year 2025, ending March 2025, their net interest income, NII, is projected to be around 12,500 crore rupees, a significant jump from, say, 4,500 crore rupees in fiscal year 2020. That's like watching a sapling grow into a mighty oak. Of course, growth has moderated in recent years compared to its explosive early phase, which is natural for a maturing bank. Net profits have followed a similar upward trajectory, though with some bumps along the road, mainly due to provisioning for NPAs, non-performing assets. For fiscal year 2025, analysts are estimating net profits around 3,800 crore rupees. In comparison, fiscal year 2020 saw profits of approximately 3,029 crore rupees. The pandemic definitely put a dent in things, but the bank has shown resilience. As a bank, their debt isn't exactly like a manufacturing company's. We look at their deposit base and loan book. Their current account savings account CASA ratio is super important because it indicates cheap funding. For fiscal year 2025, Bandhan's CASA ratio is hovering around 38 to 40%, which is decent, but they're always striving to improve it. A higher CASA means lower cost of funds, which directly impacts profitability. Their total advances, loans, are projected to be north of 130,000 crore rupees by financial year 2025. Net interest margin, NIM, is the bread and butter for banks. It's the difference between what they earn on loans and what they pay on deposits. Bandhan's NIM has historically been robust, often in the 7 to 8% range, which is excellent for an Indian bank, especially given its focus on higher yield microfinance loans. For fiscal year 2025, expect NIMS to be around 7.2%. This shows they're still good at squeezing a profit out of every rupee lent. Now, a quick word on non-performing assets, NPAs. This is where banks sometimes stumble. Bandhan, given its microfinance roots, has seen fluctuations in its asset quality, especially during economic downturns. For the second quarter of fiscal year 2025, their gross NPA ratio was around 7.5% and net NPA ratio at approximately 2.2%. While these have improved from their peak post-pandemic, it's a metric to constantly watch. Think of it like a car's engine light. You don't want it glowing red. Stock chart, technical analysis. What's the market saying? Time to put on our technical analysis goggles. We're looking at the long-term stock price chart of Bandhan Bank. If you look at the long-term chart, particularly since its listing, Bandhan Bank had an initial burst of enthusiasm, then faced some significant headwinds, especially around issues with asset quality and the general slowdown post-COVID. Historically, we've seen strong support emerge around the 180 to 200 rupee level. This is where buyers tend to step in, acting like a trampoline for the price. If it dips there, investors often see it as a buying opportunity. On the flip side, the 250 to 270 rupee zone has acted as a formidable resistance. The stock has struggled to break and sustain above this level. Think of it as a glass ceiling. The RSI is a momentum indicator. If it's below 30, it's generally considered oversold. Above 70, overbought. Currently, in October 2025, the RSI is hovering around 55, indicating a neutral to slightly bullish momentum. It's not screaming buy, but it's not screaming run for the hills either. What does this all mean? The stock has been consolidating for a while. It's been a bit like a coiled spring, either waiting for a strong catalyst to break out or perhaps reflecting the market's cautious optimism. Benjamin Graham valuation, is it a steal or a sucker's bet? Now, let's put on our wise old spectacles and channel the spirit of Benjamin Graham, the father of value investing. Remember his mantra, price is what you pay, value is what you get. For a bank, a simple Graham-esque valuation often involves looking at price-to-book, PB ratio, and comparing it to its historical average and peers, along with earnings growth. As of October 2025, Bandhan Bank is trading at a PB ratio of approximately 1.3x to 1.5x. Historically, Bandhan Bank has traded at higher PB multiples, often in the 2x to 3x range during its more bullish phases. Many established, larger private banks trade at P/B ratios of 2x to 4x. Based on these metrics, especially considering its robust net interest margins and expected future earnings growth, Bandhan Bank appears to be undervalued to fairly valued at its current price. It's certainly not in overvalued territory like some of the high-growth, high P/E tech stocks we see. Graham would probably nod approvingly, saying there's a decent margin of safety here, meaning the price isn't reflecting the full intrinsic value. It's like finding a slightly dusty antique that's actually worth a fortune. Pros versus cons, the bull and bear case. Every stock has its cheerleaders and its skeptics. Let's look at what the bulls are roaring about and what's giving the bears pause for thought. Bandhan's deep penetration in rural and semi-urban areas, especially in East and Northeast India, gives it a unique competitive advantage in microfinance. They understand this segment better than most. As mentioned, their ability to maintain high net interest margins is a testament to their business model and efficient operations. Post-pandemic, the bank has made significant strides in cleaning up its loan book, which bodes well for future profitability. India's unbanked and underbanked population remains huge, offering a massive runway for growth for banks like Bandhan with a strong microfinance focus. A significant portion of its loan book is still concentrated in microfinance, making it vulnerable to regional economic shocks or regulatory changes impacting this segment. While improving, asset quality remains a key monitorable. Any significant economic downturn could quickly impact its customer base. The banking sector is fiercely competitive, with larger private banks and even fintech players eyeing the same customer segments. The microfinance sector is often under the scanner of regulators, and any adverse changes could impact Bandhan's operations. Conclusion? So, what's the verdict, Judge Judy? Whew, we've covered a lot, haven't we? From its humble beginnings as an NGO to its current status as a significant private bank, Bandhan Bank has had a fascinating journey. On one hand, you have a bank with a strong niche, excellent margins, and immense growth potential in a burgeoning economy like India. The current valuation, based on Benjamin Graham's principles, suggests it might be a decent pick for value investors. On the other hand, its concentration in microfinance, asset quality challenges, and intense competition present legitimate risks. It's a stock that requires careful monitoring and a nuanced understanding of its business model. So, is Bandhan Bank a screaming buy or a definitive sell? That, my friends, is a decision you need to make after doing your own homework. My job here is to equip you with the knowledge, not tell you what to do with your hard-earned cash. Remember, investing is like cooking a great meal. You need good ingredients, research, a solid recipe, strategy, and a dash of patience, not checking your portfolio every 5 minutes. This video is for educational and informational purposes only and should not be considered as financial advice. I am not a financial advisor, and all investments involve risk. Always consult with a qualified financial professional before making any investment decisions. The data presented here is based on publicly available information as of October 2025 and projections which are subject to change. Don't forget to like, share, and subscribe if you enjoyed this deep dive. Hit that notification bell so you don't miss our next financial adventure. Until then, stay smart, stay invested, and keep those money monsoons flowing. See ya.